What's going on, everybody? We're just going to be doing the weekly recap of how my portfolio is performing recently. We got a lot to go over in this video. We'll also just kind of be talking about news in the markets, what's going on, and what am I thinking of the future and what the future kind of holds for the market as a whole. But everybody, before I go any further, you know the drill. Please subscribe to the channel and turn on post notifications if you have not already. Leave a comment what you think about this information. I always love to hear your input. But enough of that talk. Let's go ahead and get straight into it. So we're looking at my M1 portfolio. I highly suggest use M1 Finance. Using the link in the description or pinned comment. They're giving out free money right now, so go check it out. But what we're seeing is for the past day, so today, Friday, I'm down about $48, which is about 0.42%. And for the past week, I'm down 2.07%, which is $243.67. So looking at the activity on my portfolio for the week, on Monday, March 7th, I put in 4 buys. It just went out into scattered across my portfolio, and it went all into my financial sector. It went to JP Morgan, Charles Schwab, Toronto Bank, Toronto Dominion Bank, and Visa. Looking onto some dividends, yesterday on Thursday, March 10th, I got $2.72 in dividends from Microsoft. But that's mainly all the activity that was seen in my portfolio for at least this week. Now, looking on just kind of my entire portfolio overview, annual income about $405. Love to see this number increasing because the more you put money into the account, the higher this number should increase. My yield on cost is below my actual dividend yield, and it's because the market's been going all over the place. And there's a lot of confusion, a lot of fear in the market. I mean, if you look in the fear and greed index, we're like near the most fearful that we could be. And so that causes bearish markets. I mean, if we go ahead and look, over the past month, the S&P is down 4%. The past 6 months, it's down 5. Year to date, it's down 11. So we are in that correction territory, looking to get into a bear market, which is about 20%, but over 10%. Being down 11.53% year to date, and it's still early in the year. It's the beginning, middle of March. And what I see is a lot of people are talking about, does this mean that the S&P 500 could end 2022 a negative year? And in all honesty, it's very possible. And the reason I say that is the only way we're going to recover is simply if we make more than 11.5% returns over the next 9 months, less than 9 months. And it's very hard to do when you have Ukraine and Russia tensions. I mean, COVID's still a factor. Interest rates are rising. Inflation's gone all over the place. Companies are kind of struggling right now in this economy. And so I'm not sitting here saying I'm selling all my stocks. I think we're going to continue to fall because I have honestly no idea. This market is so fluctuative and so all over the place that it's hard to tell which way stocks are going to go because one day they do really well, one day they do really poorly. It's just a huge, just up and down cycle. And so the way that I'm playing this, and I'm not saying you have to play it like this as well, but I'm not selling a single stock unless I see there's reason for me to sell because it doesn't fit in my portfolio anymore, or maybe I just don't enjoy the stock. I don't think it's a good value play anymore. The only thing I'm doing is putting more money into my portfolio and buying more shares of valuable companies and ETFs and investments that I truly and 100% strongly believe in because I believe that's the best way to make money in the market is play the long-term game. Be patient because patience pays. Now looking over all of my different slices for the week, we can see tech and cloud computing about down 3%. Income, which is some high dividend ETFs, down about 1%. Banking and fintech down 0.18%. Consumer and stores down 2.19%. Real estates down 1.66%. And my restaurants and food sector is down 5.53%. This is actually Starbucks, and it has been performing really poorly, if I'm being completely honest. It's at $84 a share. My average share cost is $107. I've been investing in this company for a while now, but I still believe in Starbucks. I don't see them falling down. I know there's some union issues going on right now, but I don't see that causing them to fail in the long term. I think they're in an expansion era right now, and Starbucks' long-term potential definitely outweighs its cost, and I'm continuing to buy at what I believe to be cheaper prices than usual. A low PE ratio of 22, really solid. I do believe in this company for the long term. But looking more onto my dividends for the month of March, I'm expected to make about $29 in dividends, which that's almost $1 a day. And that's just incredible stuff when you really think about the grand scheme of things. $1 a day from doing nothing, I know it's not life changing or anything, but that dollar a day gets reinvested and money I make gets more reinvested. And slowly over time, it'll continue to increase. So we're just going to be patient. I made this channel for the sake of showing my progress and sharing it with everybody to be a motivating factor. But that's going to wrap it up for this video. So if you enjoyed it, make sure to subscribe to the channel, turn on post notifications so you don't miss out on any future videos. Thank you for making it to the end of this video. Leave a comment below what you think. Check out M1 Finance if you have not already. Check out all the good stuff, the good links in the description, and pin comment down below. And I will see you at the next video.